Good morning and welcome back, Dark Gamma community. It is Tuesday, May 20th, 2026, and we are coming in hot just before 7 a.m. Eastern. The SP 500 is trading at 7,388, gap up roughly 34.5 points from yesterday's close of 7,353. That is a bullish open, and we are sitting just above max pain at 7,385. The market is flirting with a very critical level right out of the gate, so today is going to demand your full attention.
Absolutely, Samantha. That gap up of about 0.47% is meaningful, but here is the nuance. We opened above max pain, which means the gravitational pull towards 7,385 is going to be a real force throughout the session. The expected move for today gives us a range between 7,313 on the downside and 7,394 on the upside. We are already pressing the upper bound of that range pre-market, so bulls need to be careful chasing this open.
Exactly right. And when you think about that upper boundary of 7,394, we are literally within 6 points of it right now. That is where gamma exposure becomes a wall. Options dealers will be hedging aggressively in that zone, and that tends to compress further upside unless we get a catalyst strong enough to blow through it. So the Dark Gamma framework is telling us, respect the range, watch 7,385 as a magnet, and do not assume this gap holds all day.
On the sector side, materials is absolutely the standout this morning, leading by over 2%. That is your risk-on signal, and it aligns with the bullish gap narrative. On the flip side, energy is the weakest sector, down about 0.8%, which is a bit of a divergence worth noting. When energy lags on a gap-up day, it can signal that the move is more sentiment-driven than fundamentally broad-based. Keep that in mind as the session develops.
And let us talk about the Magnificent Seven, because the picture there is mixed. Nvidia is the clear leader, up 1.8%. Tesla is also solid at nearly 1%. Amazon, Alphabet, and Meta are all modestly green. But Apple and Microsoft are both slightly in the red, and those two carry enormous weight in the SP 500. If Apple and Microsoft cannot get off the mat, that is going to put a ceiling on how far the index can run, even if Nvidia keeps charging.
So putting it all together for the Dark Gamma community, the setup is bullish on the surface, but we are sandwiched between max pain at 7,385 below and the expected move ceiling near 7,394 above. The implied volatility pricing for today's 0 days to expiration contracts is going to be extremely sensitive in that band. We would not be surprised to see a fade back towards 7,385 if buyers cannot sustain momentum through the open.
Bottom line for this morning, stay disciplined, let the market confirm direction in the first 30 minutes, and keep those key levels on your screen. 7,385 is your gravitational center, 7,394 is your upside ceiling, and 7,313 is your downside buffer. Dark Gamma has the levels. Now let the market show its hand. Stay sharp, everyone, and we will be watching every tick with you. On today's macro calendar, the main event is minutes of Fed's May FOMC meeting at 2:00 p.m.
These releases could drive volatility at the S&P 500 open.
Scanning across the Magnificent Seven this morning, the picture is broadly constructive. 5 of the 7 are trading higher pre-market, giving the tech sector a cautiously optimistic tone heading into the open. The group is mostly grinding higher in a tight range, though there are a couple of clear standouts on both ends.
Nvidia is the unambiguous leader, up 1.8% to $224.78, which is notable given the ongoing AI infrastructure appetite across enterprise. And speaking of AI adoption, Bristol-Myers Squibb rolling out Claude to 30,000 employees is exactly the kind of real-world deployment story that keeps institutional money interested in the AI names. Tesla is the next best performer, up roughly 1% to $407.91, continuing its recent momentum.
On the laggard side, Microsoft is the weakest link, down fractionally at $415.89, with Apple essentially flat at $298.40. Both are underperforming relative to the rest of the cohort, but neither is showing any real distribution. Amazon, Alphabet, and Meta are all slightly positive, but hugging the unchanged line, so the breadth is there even if the conviction isn't uniform.
The overall tone for large-cap tech feels like a slow grind higher rather than a risk-on surge. Nvidia is doing the heavy lifting, and the laggards aren't weak enough to drag sentiment. Traders will want to watch whether Nvidia can hold that pre-market premium into the cash open, because if it fades, the rest of the group loses its headline catalyst.
Nvidia dominates tonight's after-hour session with a 5.3% expected move on a cap north of $5 trillion, and that high beta of 1.7953 means any surprise could ripple hard across the broader SP 500 into tomorrow's open.
Exactly. And the technology sector is already carrying heavy open interest around this strike range, so gamma exposure into tomorrow could amplify moves well beyond that 5.3% band if the print is a blowout in either direction.
On the pre-market side this morning, Analog Devices leads with a 6.5% expected move and a beta near 1.4, while TJX and Lowe's are also reporting with more contained profiles given their lower betas in consumer cyclical.
Looking ahead to tomorrow morning, Walmart is the name to watch with a cap approaching 1.1 trillion and a remarkably low beta of 0.1078, meaning its 4.2% expected move is unusually wide for such a defensive name and could signal real uncertainty in the consumer spending narrative.
Bristol-Myers rolling out Claude to 30,000 employees is a meaningful signal that large-cap pharma is accelerating AI adoption at scale, which could lift sentiment across both healthcare and AI-adjacent names at the open.
Agreed. And that kind of enterprise deployment story tends to push broad tech optimism into the SP 500 futures, so watch for early gamma exposure positioning to favor the upside around key strike levels.
On the energy side, the EU reaffirming Russian oil and gas sanctions keeps pressure on supply narratives, and that should support European energy names while keeping domestic refiners in focus, given any crude price reaction overnight.
The Golar LNG dividend announcement is a quieter story but worth flagging for income-focused traders, as confirmed cash payouts tend to attract open interest on the call side heading into the ex-dividend window.
3 companies are hitting the public markets today, so let me break down what that actually means first. An IPO, or initial public offering, is when a private company sells shares to the general public for the first time, essentially opening ownership to anyone with a brokerage account.
Leading the pack is Lincoln International, ticker LCLN on the NYSE, offering over 21 million shares priced between $18 and $20. That is a substantial float and one to watch for price discovery in the opening session. AMAS
Brands is also listing today under ticker AMSUS on the NASDAQ Global Market, bringing roughly 14.3 million shares to the table, though no offering price has been set yet. That pricing uncertainty makes it a wild card heading into the open.
Rounding out the day is Aperture AC, trading as APURU on NASDAQ Global with 9 million shares priced at $10, which is a classic blank check or SPAC structure given that fixed price point. All 3 names are worth monitoring for early volume and momentum signals.
Diving straight into the structure, the nearest call strike with meaningful open interest is 7,650, which exploded over 1,115% overnight to 11,755 contracts. That kind of fresh positioning signals dealers are watching that level as a hard ceiling for any upside extension today.
On the put side, 7,330 and 7,325 are the strikes hugging spot most tightly, surging 1,164% and 590% respectively. So the market is aggressively buying downside protection just below current prices, pointing to strong gamma exposure support clustered right around that 7,330 zone.
With spot at 7,388 and max pain only 3 points below at 7,385, the pin risk into expiration is real. And the put-to-call ratio of 3.441 on the 22nd expiry tells us tomorrow's expiration is heavily skewed toward puts, which should keep dealers hedging in a way that cushions aggressive downside moves.
The actionable takeaway is that resistance sits at 7,650 given that explosive open interest build, while the dual put walls at 7,330 and 7,325 define near-term support, meaning today's range is likely compressed tightly around max pain unless a catalyst forces a decisive break of either boundary.
Kicking things off with the SP 500 0 days to expiration gamma exposure levels, spot is sitting at 7,388, which puts us above the gamma flip at 7,298 and above the put wall at 7,340. That means dealers are in positive gamma territory, so they will be buying dips and selling rips to hedge, acting as a natural stabilizer for price.
Right, and the gamma flip is essentially the price level where dealer hedging behavior flips from stabilizing to destabilizing. Below it, dealers sell into weakness and buy into strength, which amplifies moves. Since we are trading above it this morning, the market has a smoother, more range-bound character to start the session.
The call wall at 7,475 is your likely ceiling for today, as that is where the heaviest concentration of open interest sits on the call side, creating significant resistance through dealer hedging pressure. The put wall at 7,340 is your near-term floor, with dealers defending that level by purchasing futures if we threaten to slide toward it.
So the implied range for the open is essentially 7,340 on the downside to 7,475 on the upside, with spot currently riding the middle of that band. Watch for a magnet effect toward the call wall if momentum holds, but a break back below the put wall would be an early warning that the tone is shifting.
Tracking institutional footprints. The dominant liquidity level over the past year is the 7,408 level above current price, with maximum liquidity concentration over 7 sessions.
These levels represent zones where the highest institutional liquidity has accumulated over the past year, making them key support and resistance areas for S&P 500.
Over the past week, the level with the highest active liquidity is the 7,452 level above current price, with maximum liquidity concentration over 3 sessions. Recent activity confirms strong institutional interest in this area.
When price approaches these levels, watch the market's reaction closely. These are zones where major players have left a significant liquidity footprint.
Here is the complete level map for today's session. S&P 500 is at 7,388, above the gamma flip at 7,298.
1 sigma range, 68% probability, goes from 7,313 to 7,394. 2 sigma, 95%, extends from 7,273 to 7,435.
On the GX side, call wall sits at 7,475, structural resistance. Put wall at 7,340 is where dealers become forced buyers.
The top institutional whale levels nearby are 7,408. These are the highest liquidity concentrations in the market. Expect reactions there.
Breaking now from the dark gamma institutional scanner, 15 large block entries flagged across the options market today, with 4 contracts crossing our threshold for unusual size and premium concentration. Leading the flow, Micron Technology with a put position at the $630 strike expiring May 2026, commanding nearly $12 million in premium across 6,800 new open interest contracts, executed at 82% of the ask. Right behind it, Blackline with a call at the 2750 strike dated December 2026, also north of $11.5 million, and over 13,000 new contracts opened at 80% of ask.
And the semiconductor space is absolutely dominating today's tape, Samantha. Intel also triggering an alert, a put at the $80 strike for October 2026, roughly 7.8 million in premium, nearly 10,000 contracts added. That is 2 major semiconductor names drawing protective put flow in a single session. On the call side, Driven Brands, ticker DRVN, stands out with a 1250 strike call expiring December 2026, 7.7 million in premium and the largest new open interest of the 4 fresh entries at 19,000 contracts, hitting 100% of the ask. That is an aggressive print.
Now turning to confirmed flow. Contracts we flagged in prior sessions that are now showing open interest growth of 20% or more, validating continued institutional conviction. IREN, the Bitcoin mining and high-performance computing name, is confirming on a $110 call expiring January 2027, $9.6 million in premium, over 7,600 new contracts at 62% of ask. And Ballard Power Systems, ticker BLDP, is confirming a $4 call for August 2026, nearly $3 million in premium with nearly 19,600 contracts in the clean energy space.
So stepping back and looking at the full picture, today's institutional flow is split across semiconductors, automotive services, software, and clean energy, with semiconductors clearly concentrating the heaviest dollar volume. In terms of directional skew, calls are outnumbering puts in contract count and confirmed flow, but the put side is carrying significant premium weight with Micron and Intel both appearing in the same session. The confirmation of IREN and Ballard Power suggests that earlier positioning in AI infrastructure and hydrogen energy is attracting follow-through, a detail our scanner will continue monitoring in the sessions ahead.
Breaking institutional flow alert on the dark gamma scanner. A new contract entry has been detected today on Micron Technology, ticker MU. The contract flagged is a put with a strike of 630, expiring May 22, 2026. Total premium registered on this flow comes in at $12 million, making this one of the larger single entries tracked today.
Adding to that, Samantha, volume registered at the moment of detection came in at 8,960 contracts. The institutional entry price, meaning the average premium paid at the time this flow was captured, was $13.37 per contract. Current open interest sits at 8,845 contracts, with 6,887 of those flagged as new positioning.
Now here is where the tracking setup becomes noteworthy, Billy. The current contract price is $6.55, which is below the institutional entry price of $13.37. In scanner methodology, when the current contract price sits near or below the original institutional entry price and open interest remains flat or continues to grow, that combination is classified as what trackers call an ideal setup. It indicates the position has not been exited and the contracts are still being held at a mark below cost basis.
And rounding out the data picture, the underlying break-even at expiration for this contract is calculated at $616.60 on MU shares. That is the price level at which this contract reaches parity at expiration based on the strike and premium paid. We will continue monitoring this entry for any changes in open interest or contract price movement. That is the flow report for this hour on Dark Gamma Financial News.
If you want this level of market intelligence every single day, join Dark Gamma right now. Bots working for you, whale levels, real-time institutional positioning, opportunity scanners, and gamma exposure updated by the minute. You also get access to institutional liquidity and options levels for any ticker, ready to drop directly into your TradingView indicator. Exactly where institutions are positioning. No noise, just data. Dark Gamma is the edge that separates winning traders from the rest. The information that moves the market in your hands today. The link is in the description. Click it now. We'll see you on the inside.